Okay guys, hope you're well. We're going to look at why you failed today, and I'm going to put on the whiteboard the results of a poll of 5 reasons you fail. Roll the intro and we'll get into this.
Matron, take them away.
And a warm welcome to one and all. This is your first time here? I'm the big fella Scruff. And what I'm trying to do is cut through the noise of Forex trading. Maybe show you a trick or two along the way. So if that sounds good, hit the subscribe button. Genuinely helps. And we'll crack on. So what are we doing? Well, behind me is a list of failures that is really voted by you. But for failure, you also need success. And my success is walking across the room right now. Why? Because the one thing that I really like is, I like me coffee. Because we all know Scruffy likes his coffee. And he certainly does when he's doing a monologue like this, because my throat gets dry. But I like Winky as well. I do.
Do you?
Well, occasionally.
Sometimes.
All the time. She might be a pain in my ass a lot of the time, and trust me, I'm definitely a pain in her ass.
Oh, here we go. No.
But you've got to have some reason to succeed. And Winky's mine. Because if I look at the failures and I analyse it, I know it's one step further to success. Does that make sense?
Yeah.
So are we success? Are we moving forward?
We are.
See that? Do you still like me?
Yes.
See that? You still going to do things to me?
Yes.
No, yeah, well, I've got a picture of Princess Leia. There's the costume.
I don't know where it is actually.
Did you hear that? She's got one.
You dirty old.
Right, you go find that.
I will.
And I'll jump on this. Right, so my success for today is very simple. If I get paid, she puts a bikini on, and trust me, I'll get paid.
Oh, that's disgusting.
Say. Right. I do like a bit of humour. Trading is a very serious job. But if you nickel into it too hard, and what I mean is nickel and dime it, what happens is you get lost in the translation and you aren't getting the big picture. And if you're not getting the big picture, you're certainly not going to get the big paydays. But one thing that stands out with paydays is the structure. If you want a big payday, this isn't a lottery. You can't just put 6 numbers into a machine and pray to God you're going to have a big, massive win. It just doesn't happen. What you need to do is analyse, plan, treat it as a job, and you'll be fine. Compound up, and you'll find that your account grows. If your account grows, you've got the position size to trade, and then away you go. Simple stuff. So, let me just show you this a second, because it surprised me somewhat. And the reason it surprised me was very simple. Whenever you're talking to people, they often sort of blame other things. You know, oh, the market's out to get me. The broker's working against me. All of these things. They never actually look at themselves. Now, I get regular comments about how nobody can be consistent, the market's rigged against you, all of this sort of thing. And this comes down to prop industry, trading, everything. The prop industry is not rigged against you. You're rigged against yourself because you're not managing it correctly. And management is the key. Now, I know this monologue might come on, but I think it's really important to get this into perspective. When you're on a prop firm, and the only one I use, and the only one I trust, and trust is a big thing, certainly at the moment, is the 5%ers. You have no time limit. They have all the tools, but their terms of condition, and this is the big one, their terms of condition about the trades are transparent. It's all there in black and white. They say where their address is, they're front facing, you know who they are. But where all the prop industry falls down is the marketing. It's marketing on big figures. You're going to be trading a 250k account. You're going to be trading a £100,000 account. You're not even close. Your account is the drawdown. The rest of it is buying power, but you will size to the buying power, and that's where you fail. So the prop industry isn't all bad. It's just marketed wrong. But if you trade correctly, 2 to 5% a month, compound that up across a year, you'll be fine. Now, the other side of it is, it's the want to get rich quick. And you have people that, well, if you look at the glass, you have the half glass full people.
The glass is half full.
You know, there's an opportunity, I can fill this up. You got the half glass empty.
That glass is half empty.
Oh, what I don't really want it to go any lower. I'm eroding away, and they're getting a bit ground down. And they're the yin and the yang. And there's pros and cons on both sides. Those that are seeing it half empty are not necessarily bad traders. They are very conservative traders because they're watching the equity erode as the glass empties. You know, so they want to fill it up, but they're very cautious, so they'll be sipping. Then you have the half full guys that want to fill up the next bit. Brilliant, but you don't want to overflow the cup, because then you fall into overtrading, over-leveraging, and you can blow the account. So they're both pretty good at the halfway point. And then, of course, when you've drunk the glass, you've got what's left, which is the dregs. And the dregs are the ones that normally kick off. It's the stale ale. And they will just say, oh, this is impossible, one thing and another. And the reason it is impossible is they are sipping from nothing. They've got no education. They've got zero concept of what they're talking about. And to be honest, that last 5% is like where the fag ash gets dropped in, and they really are toxic and awful. They will never ever succeed. But they seem to have the loudest voice, which then ripples into the market, and everybody listens to these loudmouth morons without actually checking what's going on. So let's get into this, because I was having a bit of a ramble there, a bit of a thing. But I wanted to kind of express it in such a way that it kind of makes you think, because you can be successful every single day. Every day.
You serious?
If you plan it. Because the market is not rigged against you. You're rigged against yourself. But if you've got good planning and you're not greedy, you can have a very high hit rate by following or learning from these that's on the board at the moment. So let's have a little look at them, shall we? Now, years ago, as I was saying, everybody used to think it was stop hunting. The market's out to get them, the brokers are going to kill you, all of this sort of thing. It's actually last. 3% of people think stop hunting is the reason you fail. Whereas the number one, at 41% of the vote, is system hopping and no education. Now, this is quite surprising. There's a lot of education out there, you know, and if you can't afford education, you can pay for it in another way. And that other way is time. Everybody wants a quick fix. They want this now, microwave culture. But if you put the time in to education, what you'll figure out is you don't need to system hop. Every single system works, every single one of them, at the right time. If you put the time in, you can back test. Go back 2-3 years, see what the current data is on a single asset. Understand its movements. Go back through historical data, see the waves. You'll figure out that a moving average cross only happens under certain conditions, and it works on certain time frames, like a 4-hour and a daily. You may also find that when it's range bound, that the range is very tight and it'll respect the Bollinger Band and RSI, that sort of thing. But you would do this through time by going through historical data of a single asset. But if you're system hopping and sort of product hopping, you would never have enough time to understand what you're looking at, because you'll just get lost in the translation. So time is a payment. Look to join a decent group, and I would suggest it's only a members only, not public. Now, there are a few of them out there, but if you have to go through a gateway to get in, it will eliminate a lot of the toxic people that are out there, because they will drag you down. Why? They are failures and complete dickheads, and they always spoil what's going on. It's the same if you're in a pub and you're having a really good time and then a bunch of arseholes walk in and spoil it for everybody. That's the principle. So don't system hop. Look at something you like. Look at the time frame you like. So if you're working, you can't trade a 5-minute chart. It's ludicrous. You've got to look at a longer time frame, a daily, a 4-hour. If you are looking at the 4-hour, you enter on the hour below. Very, very simple. You know, time can help you with this. And then get yourself educated using that time. Now, you can do it, as I said, through a members group. You can go onto various websites, investing.com. There's loads of them. That will give you free education to get you the basics of what's going on. And then if you can't afford sort of to take on a mentorship or anything like that, because they are around and there are some good ones, what you do is you spend a bit of money on a good book. But get a book from somebody who trades. You know, The Rough Guide to Trading is a really good book. It'll help you. But then look at psychology, mind. Get a book on mind. What's that mean? Well, you can't control this, you're knackered. And a great book for that is The Art of War. It's got nothing to do with trading, but it's got a hell of a lot to do with psychology. And if you can understand the psychology, you'll understand that the battlefield that you're about to walk on can be made the same. You think along them lines. Very, very simple. So I can understand why that is. And the other side of this, and this is the bit I can never get my head round. You know, education is the key to success. You know system hopping doesn't work, but you still do it. And you'll put 200 quid into a broker, or you'll buy a prop fund for $400 or whatever it is, blow it, and then complain about it. Whereas at the start, if you'd spend 50 quid on getting some decent books, or 100 quid on going into some kind of group, you could have put the other 200 quid into a broker and grew it up with the backing of education. Just a thought. Invest in yourself. So number 2 is exactly what we're just coming on to. You oversize and over leverage. Now that's why I was talking about the prop fund. Prop funds are massively over leveraged because you are basing your size on the buying power. No. Yes, they've got low leverage and they'll talk, say, oh, we're giving you 1 in 6 or 1 in 30, whatever. And I see it in the comments, oh, this leverage is rubbish. Why? Leverage has nothing to do with anything apart from being able to open an expensive asset. If you want to trade the DAX, you need to trade it on leverage because it costs a fortune to get into it, like the Dow and pound JPY. They're very expensive products to trade. You can still do a pound a point, but the margin requirement is a lot, so you need the leverage to cover it. So you've got a 10K account. You are not trading 10K. And I'm just using an example of the instant funds for the 5%ers here. You are not trading 10K. What you're trading is $600. Why is that? That's the drawdown. So if you're trying to trade that on size, that's where that comes from. You are oversized and over leveraged. But if you traded on this, you'd be safe and you do little steps every day, bum, 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 And you'll find that you don't blow your account up. Your account grows steady. You've got unlimited time to pass this thing. And if it takes you 6 months, it takes you 6 months. If it takes you 6 weeks, you're gambling. Period. And I don't care who you are and what you do, you're gambling. And it can't sustain it. It will burst you. So what would be the biggest size on that? It would be 0.06. That is your biggest size you can put into that account. Now, the gamblers of this world will go, I'm not waiting that long, it'll take forever. I'm only going to get 60 pence, a couple of dollars a day. So what? It's more than you started with. That is the maximum size. And anything above that, you're gambling. Which is why that oversized is number 2. All that happens is you just need 1 or 2 bad trades. That's $600 gone. Slowly. Where does that come from? It's very simple. 100 equals 0.01 or 10p for every £100 for every 1,000 of liquid money or drawdown money. Okay. So that takes us to the next section, which is 15% saying they overtrade. Of course they do. Because you're gambling. Period. The market will give you 1 or 2 opportunities per day on a single asset. Now, if you're trading multiple assets, well, you're diluting the amount of times that you're going to get punched in the nose. Right? In other words, you're increasing it rather. So what you want to do is you want to drill everything down into a single asset, just one, and then look for them 1 or 2 opportunities per day and take them when they come. Now, if you round a day job, you're looking at a 4-hour chart. Well, you can see a 4-hour chart a few times through the day. So you'll catch the morning session, you'll catch the afternoon session, and you catch the evening session. And you'll be able to read what's going on at the top of the hour. But because of the time frame, you've got to let the candle close 1 or 2. Even with an hourly bias candle, I trade hourly charts, by the way. That's only 8 opportunities a day because I look at the chart at the top of each hour. And I only go to market when it's ready. I don't willy-nilly go, I'm overtrading. I'll have a trade idea, I'll wait for the conditions to right, and then I'll manage the trade. But I don't take hundreds of trades each day because I put that into a poll as well. And it had, in order to make a wage, you had to trade 20 times a day. No, you don't. Once or twice, and do it every day consistently, you'll be fine. And that's why I said at the beginning of this, you can make money every day as long as you're patient. So overtrading is a big killer, and you've got to be really careful of that. And if you are not profitable, why the hell are you going to market over and over? You're already telling yourself you can't do it. Step back and wait. And if you have to wait all day or to the next day, it's better than taking a substandard trade and eroding your account, especially when it's coupled with an oversize. Because that oversize, coupled with the amount of trades that you're taking, will kill it. Trade less, trade small, and build. Best advice I can give you. And then you come on to this, because I've just said wait. Well, 10% said FOMO. And if you don't know what that means, it means the fear of missing out. In other words, you're watching the chart, you're ready for the chart, you're really excited. Oh, I've got to get in, let's go, boof. Oh shit, this is going the wrong way. Because you let your emotions take over. No, mark your chart out. Once or twice, size down, put a pending order in, and I stress pending, so wait, so the market must come to you. And if the market's coming to you, it'll slow you down, and that'll stop your fear of missing out. But what it'll also do is give you the opportunity to keep addressing what's going on the chart. And you might think that you're wrong, you have the opportunity to take the order out. But if you just press the button, you don't have that opportunity anymore. So even if it's going to be a quick scalp on a 5-minute chart, 1-minute chart, if you're drilling it that far in, still put a pending order. Because if the market just drops away, fine. Didn't take you in. But if you were right, well, it'll just trigger it. Gives you that few seconds to think what's going on. And then finally, we're back to where we started. Stop hunting. Now, stop hunting does exist to a degree, but certainly not the way that most traders think. Most people think that, oh, Johnny's just gone into market with a pounder point and the market is going to go, oh, he's gone in with a 10 pip stop. I'm going to go take that because I don't like Johnny. Johnny's a moron. Well, Johnny's at the bottom of the glass, see, and probably is a moron. But if you think for a second a broker is thinking, oh, he's just put his stop in there and I'm going to go take it just so I can take his money off him. They don't even know you exist. You are insignificant. All a stop hunt is the market makers and the institutional traders better at the job than you are, and they are building up a position backwards through key points on the chart in order to make a better position. It's the essence of what madness is, you know, because when you're scaling, you can scale forwards and you can scale backwards. If you're scaling backwards over the short term, it's really there just to build up a bigger position for the bigger move. And it's a sensible way of doing it because you reduce your exposure and the upside is increased. Now, if you're scaling forward, the principle is the same because you are buying pullbacks to add into the trade as it moves forward. So you are still essentially trading backwards. And this is one of the mistakes a lot of people kind of forget about. They are just doing a job and they're going, right, okay, it's bottomed out here. I'm going to wait for it to come down. I'm going to get in and then I'm going to go back up again. They're staging it backwards to move forwards. They do it all the time. I do it all the time. You see me do it all the time. It's on a very small scale compared to the big boys, but it's still a way of trading. It's not stop hunting. They're just working out where there's good key areas of the market to conduct business. And if you don't know where they are, just look in historical charts, going back to the start of knowledge and education, and you'll start seeing how big the waves are and where potentially pools of orders might be or areas of interest. So that's 5 reasons you fail, and I hope that kind of makes sense for you. I genuinely do. Failure is, how do you put this? Everybody thinks the market's out to get them. And as we've just proved, really when it comes down to it, it's not. Loudmouths think the market's out to get you. The person who wants to try and figure out how trading works kind of understands that it's system hopping and the lack of education. So what I would say to you guys is take the time, not the money, but time to understand what you're doing and do it very systematically. Very simple. Little checklist for you. Time. When can you trade? What time can you trade? What? What are you going to trade? What do you want to achieve? Okay. This. So that's your product. Target. In and out. So, time can I trade? What can I trade? What kind of targets am I looking at? If you're looking at a 5-minute chart, you only want to be targeting 10, 15 pips. You're looking at a daily chart, you want to be targeting 50 to 100 pips. So it determines what's going on. And then simply want. What do you want? Ask yourself this. What do you want? Do you want to do this as a job, right? Well, the only way you're going to do it is build up capital. Do you want to do this as a hobby? Brilliant. Enjoy it, but don't gamble with it. Do you want a holiday using the chart as a vehicle to get there? Brilliant. Then work out how much the holiday costs, how far away it is in the future, how many working days there are between here and now, or when you need to pay for it, and you trade to that target. Simple stuff. But have a checklist. Have something written down that'll give you something to think about, and then apply what we just spoke about, and remember these last words. Less is more. Trade less, you will get more. I'll cherish your thoughts in the comments. I genuinely will. I answer every single one of them personally, and we'll try and get through this journey together. So as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.